wealth is moving on chain. Okay, it's moving on chain, and there's no doubt about it. Its agents are going to be talking to other agents, and that's going to become the dominant, pool of transactions rather than, humans interacting with other humans. Everyone's worried that if they blow themselves up and there's a forced liquidation of these positions, it's going to drive Bitcoin through the floor. They're actually in pretty good shape as a company.
Hey everyone, before we are starting with the episode, I need to ask you for a small favor. Every week we are doing a lot of research to get you the best insights. Please support us. Hit the follow button, share the podcast with your friends. Thank you very much. And now, let's start with the episode. Bradley, great to have you in today at Deep Tech Insights. Let's imagine we're having June 2020. BTCE lists on Xetra. Did you actually think it would work?
Well, that's a great question to start. I mean, I really did think it would work because I had quit my job in TradFi to start this company. So I had conviction for sure. It took a really, really long time to get approval from BaFin. So during that time, I was really questioning my decisions and wondering if I'd made the right choice. And then we eventually got approval, and the product was a success. So it was really, really reaffirming to get that success and get that early success as well. But it was incredibly difficult because we had gone from being a company in a permanent state of waiting and preparation to then all of a sudden being, live and active. And it was quite hard to shift gear, to get operations working and everything going, but it was fine. It was good.
Bitwise was quite one of the first movers, right? When it comes to Bitcoin ETPs over there at that time.
So there was a split, between Bitwise in the US, which was the original Bitwise company. I originally started a company called ETC Group back in 2019 that was acquired by Bitwise in 2 years ago, in August of 2024. And actually what we were doing at ETC Group on this side in Europe was very, very similar to what Bitwise was doing in the US. And Bitwise was only in the US. They were very early applying or trying to get approval for a Bitcoin ETF in the US. And of course, we had been doing the same and then got our first approval in June 2020, as you mentioned, here at ETC Group. And then I met Hunter, and we talked about, we got on straight away. We realized that we had quite a similar cultures as companies. And then the merger happened, the acquisition happened in August of 2024, and ETC Group became Bitwise. And actually it was a really, often you have these mergers that are, acrimonious or difficult, or, the talent leaves straight away because they're unhappy or that's not what they signed up for. But in this case, I feel like the entire team was really sort of motivated and happy with Bitwise and the culture that had come with the acquisition. And it's been a really good merger, actually.
How many customers do you serve now as the overall group?
So we serve many thousands of customers. It's the customer base ranges from retail investors, because our products are retail approved both in the US and in Europe, going up to private banking, wealth managers, family offices. And then further up to hedge funds, asset managers, increasingly now pension funds and sovereign wealth. And these are types of clients that move more slowly, by their nature move more slowly, but crypto has been very much a retail driven phenomenon, which makes it quite unique, I think, in technology. And as a result, a lot of the early investors were retail And now very much the institutional investors are here. So yeah, many thousands. It's hard to quantify because a lot of it, often we have like use platforms which sell onward to other groups of customers that we don't even know. So we just see the aggregated orders coming in for the products.
What number for AUM are we talking about?
So globally, the AUM is around 11 billion at the moment. Of course, it's strongly affected by the price of Bitcoin. We were around 15, 16 billion before the sort of October 10 sell-off happens. But that's fine. Look, it's not the first time we've lived through a down market, a crypto winter, if you want to call it. These cycles.
Again.
Cycles. Yeah, exactly. We've been through a few now, so we're starting to, get used to it, as hard as they are. But businesses, their cycles, and it's you just have to accept that comes as part of the territory, and a lot of people are resistant to accepting that because they just want the number to go up, but it's part of it. Actually, it's really healthy, I think, for the industry. You get consolidation. You also get the weaker companies that are drop off, and people also manage costs better. I think it is a healthy thing to have to live through these up cycles and then down cycles where you really have to make sure your business fundamentals are strong.
But do you see like a difference compared to previous bear markets? Because I have still the feeling that we have a much broader institutional adoption compared to the last cycle. I mean, obviously, because with the ETF, ETP products now out, the retail, the institutional investors can invest into these projects more easily than they could before.
Yeah.
But also, do you see that in the current stage of the market?
Absolutely. I think you're right. I think that with the institutional buyer now in the market, it changes the whole profile of this down cycle. In fact, we believe, or the research team at Bitwise believes, that this bear market has actually been in place for longer than people think, and since the beginning of last year. And actually, because of the institutional interest and companies. Treasury companies like Strategy and others, buying so much of the, of Bitcoin, it's actually kind of hidden the fact that we were in a bear market because of this institutional demand. So I think you're absolutely right. It feels different this time, and also for talking to the sales team who are out there talking to institutional investors. In the last bear market, sort of, in 2022, there was no one wanted to take a meeting, institutions, and now everybody does. They're looking at it completely differently. They're seeing, Bitcoin, at 60, 62, 63 as being an excellent entry point, rather than the kind of sort of FOMO driven, interest that we had in the past, when Bitcoin was reaching its new highs, were people sort of paying attention. I think it's really Bitcoin and some other cryptos as well have established themselves as part of the investment landscape, institutional investment landscape, and retail investment landscape, and I think it's showing that this asset class is maturing.
Yeah, I think so as well. But maybe let us get back to the products you are offering at Bitwise. So when we are talking about ETPs, maybe make a short explanation about what is an ETP, and why should people trust an ETP more than holding the crypto by themselves?
Well, that's a good question. And just to start, saying that, Bitwise has quite a whole range of products that goes from vaults and, alpha strategies, the ETFs in the US. But in Europe, our primary focus, also staking as well. We do stakings for institutions and for large holders. But in Europe, one of our primary focuses is the ETP, and ETP simply stands for exchange traded product. it really, what are you getting with an ETP is you're getting regulated exposure to Bitcoin and other cryptocurrencies. These products have been around for a while, and I'm not going to make the argument that people shouldn't invest directly into crypto if they want to. This is just another path. It's another channel to get that exposure. The reason why people choose ETPs over, some people do both, will invest directly and hold the ETPs. And there are reasons for that. Some investors firstly just don't are worried about the tech and are worried about the stress of being your own bank, so they worry that they're going to mess something up. They're going to expose their passwords, inadvertently have taken a photograph of their seed words, and then, that's going to be somehow make its way into public domain and they're going to lose everything. People stress about the responsibility of being their own bank. And products like these ETPs removes that. It's just like trading shares. It's held in your brokerage account. You don't have to worry about it. And also it's easier if for a lot of companies to get, for capital efficiency, they can use the ETPs as collateral for leverage, for financing, which they have a harder time doing with natively held Bitcoin in a Bitcoin wallet. But that's actually changing. There's more of these sort of crossover financial institutions that are offering people the ability to use their Bitcoin as collateral. But in a nutshell, people use ETPs to get exposure to crypto, mostly just because of the concerns about not understanding the technology, worrying about security of holding the products themselves, and then for financial reasons, either for financing or and capital efficiency, but also sometimes for tax protection. There are tax. Each country has these tax protected long-term pension plans, and you can easily put an ETP into them in most jurisdictions, but you can't put natively Bitcoin or Ethereum in. And so that's one of the other reasons why people, even ones who are crypto native and are very comfortable being their own bank, may choose to buy the ETP as well.
It could, especially in Germany, even increase, right? Because now the government wants to switch the tax regime.
Yeah.
Like normally you can when you hold Bitcoin over a year, you don't get taxed on the gains, but that seems to fall now. So probably in the future it will be counted as stocks, and then even the ETP is more interesting for the people, right?
Yeah, it's interesting to see that we've been very aware of the German, because Germany is a very important market for us. So we've been very aware of the German tax situation, even back in the day when we were writing the prospectus and getting that approved with BaFin. We wanted to get that tax exemption for the investors. The ETPs that we have in Europe also allow for direct redemption. So people who are holding the ETP can say, I want the Bitcoin, and then they have to go through a KYC process with us and prove that they got control over the Bitcoin wallet, and then eventually we will send them. And we've done this many times already. Most people aren't interested in that, but some people do want that. And I think because of this fungibility, the ease with which you can switch the ETPs to Bitcoin or to any other cryptocurrency, if it's a sort of Ethereum ETP or Solana, I think that has definitely been a comfort for investors. But I'm interested to see how that's going to progress. We're watching the tax situation very closely in Germany, and hopefully we'll end up with a sensible outcome.
Yeah, I'm watching it as well.
Yeah, sure.
I mean, you have a wide variety of crypto products now. Like, how do you decide what kind of new product makes sense for your investors?
So we look at there's a lot of cryptocurrencies out there, a lot of projects, and some of them are really good. So on the one hand, we do look for innovation and real innovation, and then there's often we'll make the decision based on conviction. We feel like recently we launched BHYPE. Just a Hyperliquid ETP, and it gives exposure to the hype token, and a product for Canton as well. And these are crypto projects that we think have got legs, are going to go far, and that investors will be interested in investing in, because it's expensive to bring these products to market. And so we would prefer to bring products to market that are likely to be successful, or accumulate assets. In the end, we're a business, and that's why we're here. And so we make a decision based on what looks interesting, what we think is going to grow, and also what people are already interested in wanting to get exposure to. So there's that, and then also different types of products that we have. We have index products. We have the world's only crypto index product that's based on an MSCI index, and that is DA20. It gives exposure to the top 20 cryptocurrencies, and there's a quarterly quarterly rebalance, and the winners are added and the losers are dropped out of the top 20 automatically. So that's a way for people to get exposure to crypto markets in general, without having to pay close attention to what the new cool or a popular coin is. And then we've got a new generation of products coming out, which I can't talk too much about, but it will involve yield, and I think everybody's interested in yield, and so for people who are interested in crypto and yields, these will be something that will be interesting for them.
That's cool, because I see like a lot of shift in the market, right? I mean, when you think back 5 years or so, kind of the industry was maybe the Wild West is a little bit harsh to say, but kind of, and people were looking for the gains. But what I see now is that especially institutional clients are now looking for the technology, so more on the application layer. What can I do on blockchain? And we are also talking with a lot of institutional players and banks who are using the technology in the future for cross-border payments, etc. How do you the whole space evolving over time?
Yeah, it's interesting. I think what you're saying is completely valid. There's definitely a shift. There's a growth in the level of sophistication from investors. They understand more. When we look at the market today, it's very Bitcoin dominant. There's I think from the entire ETP ETF market globally, I think is something like 83% in Bitcoin. So there is. People do see Bitcoin as something apart, and view it differently to other cryptocurrencies, and I think that's right. I think that's right that they should. It is unique in the way that it's censorship resistant and stateless, and and really limited in the amount of Bitcoin that will ever be produced. This is like a real sort of hard currency and store of value. Of course, it's still volatile, but people are recognizing, institutional investors are recognizing that it makes sense to include that in a portfolio. Make an allocation 1 to 5%, sometimes more, to Bitcoin. They get a lot of upside without bringing the negative elements into the portfolio. The volatility doesn't move that much, and the max drawdown doesn't move that much either. So it makes a lot of sense. And I think when we talk to a lot of institutional investors, they recognize that. But then at the same time, it's not all only about Bitcoin. Of course, Ethereum and Solana are very compelling stories as well, especially with the growth that we've seen in tokenization and stablecoins. I mean, stablecoins ultimately is just tokenization of fiat currency. Yeah, and there is interest in the platforms that are underpinning these stable coins. So that's interesting as well. And then of course Hyperliquid has been very, very popular. This whole play and the way that market share has moved onto Hyperliquid for perpetual futures has been astonishing and a real success story. So I think there is greater sophistication. There's more discernment, and there's a clearer idea of what why they're investing. And that, compared to 5 years ago, there wasn't that level of knowledge and education. And at Bitwise, we see education and research as a very, very important part of what we do and our service to our customers in the end, because it is still a new asset class, and there's a lot to know. There's a lot to learn, especially if you're that investor who's used to consuming research from investment banks, in a certain kind of format and style. We try to at least speak pitch it at a similar level.
Because you mentioned tokenization, like how do you see it? Because for me, I think it's one of the main drivers right now in the industry, especially tokenization of real world assets, and more projects are popping up all across the globe.
Yeah.
Are you already dealing with it, or are you working on any kind of products to that? Because I think there's not an issue with finding people who want to tokenize their assets. It's more like the issue on getting them sold.
Agreed. Look, I think tokenization is a mega trend. This is the way I see it is that you've got TradFi, the existing the legacy financial world. And then you've got DeFi or the on-chain world, and wealth is moving on-chain. Okay, it's moving on-chain, and there's no doubt about it. It's growing more and more. We've seen the growth of stablecoins. There's an example of that. We've seen the growth of people investing in Bitcoin and other cryptocurrencies. That's another example of it. Now we've got vaults. We've got staking. There's all these opportunities for yield on chain, and the more that wealth moves on chain, the more there will be a need for the same access to the same kinds of products that you have in traditional finance, and that's why tokenization is inevitable. People are seeing the efficiencies of moving onto the blockchain for all sorts of things, including real-time trading and settlement. And there's efficiencies there. It's a much better system. It's the system, a financial system of the future, and real world asset tokenization will just grow more and more. And Bitwise is of course very much aware of this. We have an on-chain solutions business that's growing. We have vaults. These vaults invest in real world asset tokenizations. We have partnerships for tokenization. And we've got a product to USCC product with Superstate that is a tokenization play as well. And so this is inevitable. We see the company moving from securitization of tokens, which is what ETPs and ETFs are, to tokenization of securities and everything else. Not just securities, but whatever can be tokenized ultimately will, if it makes sense. Occasionally there'll be things where it just won't make sense. But as long as it makes sense, I think this is in the future, and I think AI will accelerate this process. It'll be a flywheel. Yeah.
Do you have any predictions for, let's say, 2030, like how much the whole tokenization space will grow until then? Because there are wild numbers out there from different kind of consultancy agencies.
Yeah, I think this new the next 5 years, we've got some research which quotes some numbers. I feel that it's hard to know because the tokenization, there's two things that are hard to know. That will tokenization happen, and will happen for most assets? Yes. How quickly will that happen is the question mark, because a lot of it is dependent on how fast AI agentic transactions happen, and how fast AI agents grow, the community of AI agents, and so it's difficult, what I think, to arrive at a quantum. But what we've seen with the growth of tokenization of fiat, with USDT, USDC, and now this open USD project, with all these massive institutions, and so many of them, which will, there's no doubt that that's going to grow and attract liquidity. Besides that, you've also got, you've got this whole X402 Foundation discussion that the protocol is being driven forwards, and also venture capital loves tokenization. They're looking for, I think the venture capitalists are looking for, in crypto, more mature products, more mature, where there's a clear path, there's a clear understanding who the market is, what the revenues will be, and I think tokenization and done well is very investable. So it's an interesting time, and I think it's just a question of, just if you're looking at, these are the assets that are in TradFi, and these are the on-chain assets here that are much smaller. How quickly is that shift going to happen, and how soon will those on-chain assets, be the majority of assets out there? At what stage is that going to happen? Because I think it's inevitable that will happen. Whether it'll happen by 2030, I don't know. But what we're starting to see now is the beginning of this really, really powerful mega trend that's going to, nothing's going to stop it. So
yeah. There's also quite some risks involved, right? Because you said most of the investors are still holding Bitcoin. How do you see the quantum risk for Bitcoin? Because I just saw that the Ethereum Foundation made an announcement yesterday or today that they are spending a lot of time and development now to make Ethereum, the chain itself, safe against any kind of quantum risks. How do you see that for Bitcoin?
So we at Bitwise, we actually have in close contact with the core developer community, the people who are actually maintaining the Bitcoin protocol, and we actually in the US, the 10% of the profits are given to organizations like that, because it's important that we feel, as a member of this community, that we help with the development and the movement in the right direction. I think the core developers and the Bitcoin community at large are very, very acutely aware of quantum risk. They're watching closely the timing, the developments, the breakthroughs in the building of these quantum computers, and it again is hard to predict when your Q day or whatever you want to call it, or the point where quantum computers will be powerful enough to to challenge the security of the Bitcoin blockchain. But the areas of vulnerability are now very well known. There's already work underway to fix those areas of vulnerability. There's, of course, the big well-known problem is the wallets that are no longer that are lost or no longer managed, including the Satoshi wallets, or Patoshi, as a pattern of Satoshi that people sometimes refer to them as, and that's the concern, and that's really the area where the community will have to make a decision at some point. What do we do with these tokens? How? Because people have to upgrade the wallets. The owners of the wallet have to make the decision, and if there's no one there, it's difficult to. It's sort of against the rules and the protocol to force. It's a censorship-resistant protocol ultimately, and this could be argued as a kind of intervention that is like censorship, right? We're going in and we are against someone's will, or in the absence of somebody being there to express their will, deciding to release, to upgrade these wallets, or release the destroy the tokens, or whatever the plan is that they ultimately decide on. But I'm not losing sleep about it. I can share that with you. I've been in Bitcoin for coming up a decade now, and especially and I'm not worried about it, because I know that this is being addressed, and there is time, and we will arrive at a solution. I think also a lot of people immediately will jump to quantum and look at cryptocurrencies and say Ethereum or Bitcoin, how is this going to be attacked? But I think any technology is fair game when you're using this kind of the power of quantum computing. Any legacy systems, and there's a lot of value out there that isn't in Bitcoin, the Bitcoin blockchain, and so I wonder when we reach that day, what where the bad actor who has access to one of these computers, what they will target first. And that's an open question for me. And I don't know, does it necessarily make sense for them to go after Bitcoin, or are there bigger opportunities, easier opportunities out there?
Yeah.
So yeah.
I mean, to be honest, I'm highly in favor to get Satoshi's wallet out of the game.
Yeah.
Because to be quite honest, how do you explain an institutional investor? Look, we have a mega holder there. Nobody knows who he is. And if he, at some point in time, dumps his holding on the open market. Like, did you had like these kind of discussions with investors?
Yeah, I mean, it is. You're absolutely right. It is a difficult one, and it is an unusual one to explain. And I would rather there be some clarity on that, where this wallet is just kind of locked up, and they do a one-off. I'm not really sure. I mean, I'm sure I would love to go to a day where people present the arguments for both sides, but I think it makes sense that they just in this case, let's say kind of like cauterize, lock off these wallets from the rest of the world and upgrade the security on it. But I'm sure there's a lot of Bitcoiners out there that'll be, banging on the table in disagreement. And that's it, right? It's an open debate. Hopefully we'll arrive at the most sensible solution. But yeah, I think I think it also that if they put out a message that people who have still access to wallets that haven't used it for a long time should use it to show that these wallets aren't lost or locked. I think that then give people a warning of a period of a year or two or whatever to do that. I think that kind of makes sense, so that you do know that these are actually really are lost, these wallets, and what we do with those tokens is up for debate as well, whether we just lock them up or recirculate them, or make them available. So I don't know.
Yeah. But there's always the discussion around these mega holders, right? JP Morgan last week just said that Saylor is a big risk to the market. And I mean, this was after he sold, what was it, 32 Bitcoin, something like that, and the whole market panicked. How do you see that? How do you see that?
It's a very interesting one. So, and I feel like this is kind of what's happened with strategy as a kind of like end of cycle behavior. What's going on here? There's at the end of cycle, a lot of the leverage gets kind of squeezed out of the system, and with strategy, hats off to them for the financial innovation that they've been, trying to. They're really trying to push forward and create things that people haven't seen before. But not everyone is comfortable with that. The strategy's bet is it's a long bet on Bitcoin and a short bet on US dollar. So they're selling these products and giving yields in US dollar, and then it's underpinned by Bitcoin. There's always we've done Bitwise has done studies of what if you really stress that, how long can they last? And I think a lot of people were worried because Saylor said he was quite adamant, I'll never sell Bitcoin. And then the investors will, if you aren't going to sell Bitcoin and most of your holdings are on Bitcoin, and there's a massive drawdown, how will you fund and how will you pay investors, back? Because ultimately, these are credit products, and how will you pay the coupon or the 11.5? I think it's gone up to 12% yield, and so I think that's why he did sell the 32 Bitcoin. And then now that wasn't enough for the market. The market's concern. He has a hold of, I think it's something like 817,000 Bitcoin. I may not be entirely up to date on that number, but that's kind of what's stuck in my head. That's a huge percentage of the total 21 million, Bitcoin. And so everyone's worried that if they blow themselves up and there's a forced liquidation of these positions, it's going to drive Bitcoin through the floor. And so what he's done now is he's kind of sort of pushed out a rule book on how he will be selling Bitcoin and what circumstances. And I think the market has accepted that. Initially, they weren't buying it. And you had this, the stretch depegging from the $100 mark. It went down to, I think, almost like 70. And then that was really the market saying, we're not happy with what's going on here. So now I think what they've done now is more sensible. And it's taken the concern out of the worry out of the market. Some strategy will sell Bitcoin, and sometimes it'll be a lot, but it's not going to be 817,000 Bitcoin, which is the real worry. That's like existential for Bitcoin. If you have an event like that, it could drive the price down to zero. And I think the concern in our research shows that they're actually in pretty good shape as a company. They've got large holdings of cash. They've got large holdings of Bitcoin, but the investors ultimately wanted to see larger cash holdings, to meet their obligations.
You just said that is kind of an end of the cycle behavior. So where do we stand in the cycle?
So our research team and Matt Hogan, the Bitwise CIO, has this this belief now that we are very late in the cycle, and that we are, if we haven't already bottomed, we are there and thereabout. There's incredible resistance to Bitcoin moving lower, even when there's been excuse me, some shock events like we had with strategy. The price of Bitcoin didn't fall. There's this resistance, and that this support that we're seeing usually signifies that this is the bottom. That there's no more to go, and that people are at these levels are more prepared to buy than to sell. And so, it's always hard to time. It's always hard to really be accurate about picking the bottom, but it doesn't really matter, actually, where the bottom is. When the last cycle, I think the people who bought at 5,000 and then it fell to 3,500 don't care now that it's, at 63,000, so, or higher. So it doesn't really matter. I think it's at these points, Bitcoin is very, it's a very good price, a very good entry point, or a very good point to, $2 average, your position.
Yeah, and Bitcoin also kind of depegged to the stock market, right? When you see the last cycle, it was like nearly the same: stock up, stock down, Bitcoin down. Yeah. Now we have stock up, Bitcoin down. Yeah. Like what will happen when we see kind of a crash in the stock market? Will Bitcoin go up?
I think that phenomenon that we've seen is coupled to two things. I mean, the research team will tell you, will talk your ear off about this, about all the other points that they see as well. But for me, more of like my personal view is that AI has been sucking a lot of all the oxygen out the room. Okay, so people see these, the SpaceX IPO, which a big chunk of that was actually XAI. That business line was being funded by that, and then we've got Anthropic and OpenAI all making moves towards investing in AI. We also see Google doing secondary offerings to raise again funds for AI, and this has become like the new sparkly thing for a lot of investors. And some of them will see crypto, Bitcoin as an older story, and maybe not as exciting, and so that's driven the stock market up. And I think also it's not only driven the stock market up, but it's also papered over the whole debasement story as well, because people feel it's not so urgent, that the dollar's still, there's still a huge amount of expansion of money supply. This is a whole other story, but I feel like the AI, the success in AI, and the push that the market and technology tech stocks have gone through is showing kind of like bubble type symptoms, and at the same time Bitcoin is not getting the same attention, it's not getting the same level of investment. So yes, it's very much decoupled for those reasons. What will happen the next time that there's a global geopolitical shock, or or a big bull run in the stock market? Will Bitcoin perform similarly? I don't know, but because correlation changes, it keeps shifting. We've seen this with Bitcoin so many times. People was like, oh, it's correlated to NASDAQ 100, and then until it wasn't, and then it was again, and then it wasn't. So I think it's kind of its own thing. It's its own animal, and for that reason, I think correlation remains ultimately fairly low with stock markets.
Cool. So let's talk about a few words about your personal career. You have been working in London, in Paris, in New York. What brought you to the blockchain space?
So my whole career, I've always been interested in technology, and I've always worked. I worked in financial services, in investment banking, but always in the technology side of it. So when I was I worked at Jefferies for many years. Actually, with Jefferies, I moved I was working at Jefferies in New York, and then they moved me to Paris and then to London. So that was part of that move was related to Jefferies. And when I was there, and subsequently when I was at KCG, Knight Capital, I was working on algorithmic trading, and so really technology overlay onto equities trading. So I've always had that interest in how tech can, the intersection of tech and financial services. I also worked at a fintech startup, a payments company called Zappa. It's still going. So I was always interested. I was interested in Bitcoin from the very beginning. When I first started to see articles on Bitcoin, I was super interested in it. I wish I could say that I invested like day one or early, but I didn't. I was just more interested academically, and philosophically, because of what the transformational power that Bitcoin has. If it was to become, mass adopted, which it has, and this is super interesting. So then one day I was working at an investment bank. And one of our clients, who was a quantitative trader, came to me and said, "I heard you're the Bitcoin guy," and so we sat down, and he said, "I've got an idea for a company," and that was basically the ETC group, the company that was ultimately acquired by Bitwise, and was to offer Bitcoin ETP and to do it better than the existing products out there, which was the XBT provider, which was, up in Sweden, which was, great that those guys got their products so early. But, not great in terms of how the product is structured. And so we thought there was an opportunity, and it turned out we were right. So that's how I got into crypto in terms of working in crypto. I have to say that I'm super happy to work in crypto. It's such an interesting space. It's the future. It's where we're going in financial services and in everything else ultimately. So very, very grateful and happy to be working in an industry which is interesting and fast moving. It was a good jump for me to make that move back in 2017 to out of traditional finance and into crypto.
And as you have been like so early in the space, you have been seen changing law and policies over the time. Like, where do you think do we stand now with MiCA compared to the rest of the world? Is it a framework that enables Europe to be like having a leading role here, or is it like more on the other end?
Well, look, MiCA, I think is a decent framework. A base framework of regulation. I think it's important that we have that. It's not loved by everybody. We saw Paolo from USDT not speaking kind of against MiCA and the regulation, but I think it makes sense. There needs to be regulation. It needs to be sensible regulation, and this is what I always argue for. You can have an opinion about Tether versus Circle versus Open USD, but ultimately, I think with Tether being such an important part of the market, I think it should be part of the conversation. I think MiCA has provided a good base regulation. It's also protecting investors from charlatans, from people, because of the requirement for KYC. These are all necessary things, and with a good framework and sensible regulation comes the investors, institutional investors in particular, relax, and then they are happy to invest. So I think it's a good framework. I think we see sensible frameworks in other markets. In Hong Kong, we've got the Genius Act in the US as well. It's the beginning of things, of a longer term pattern of regulation. What I always say with regulation is you don't want to kill the goose that's laying the golden egg. You don't want to overregulate. You don't want to regulate with unforeseen consequences. And I've seen that in financial services. There's new regulation that comes in, it's going to fix this, and instead it creates a much bigger problem, or actually has this unforeseen consequence of actually making the market less efficient, or concentrating the power in the largest players, because the small players can't afford to comply, because the regulation that hasn't really thought about a startup company and how that would fit into it. They've only really imagined the largest players, and I think regulators have to be very careful. There's opportunity, there's job creation here for sure. All European markets, countries must or have seen that there's opportunity here for job creation, and of course, you're getting more taxes, and so this should be treated carefully and thoughtfully in terms of the regulation that's created going forward in the next rounds of MiCA.
What would you change in the regulatory framework we have right now, if you could?
So where my company, where Bitwise sits right now, I don't really have any real beef with with how it's set up right now. So I don't have any real problems that I might, if you ask me if we have a conversation in a year's time, I might come back to you with something that's really holding us back. But right now, I don't see that as holding us back. The products that we issue, the ETPs, are not MiCA regulated. They're actually regulated by MiFID. a different financial instruments directive, and so right now where we are as a company, we're comfortable with MiCA and where it's at, but with each additional layer that you add on, and just hoping that it'll remain sensible and not too burdensome and costly from a capital efficiency point of view, and other point of views as well for companies trying to operate in the space. We really like the fact that there's startups, people can start up and make a difference. We don't want to kill that innovation.
In this European context, how do you see the importance of a bigger European stablecoin? Because I know many companies are working on it, and they are already out there, but I think they have a tough time to compete with the global market.
I agree, I think it's important. I think there needs to be growth in the space. As you said, the USD really dominates in liquidity, and it's kind of in the same way that USD has dominated, in fiat currency has dominated global markets. It feels like it's, people, often see the US dollar in terms of fiat terms as like the sort of the least dirty shirt, out there. They and so it remains popular, but I think and liquid, and I think it'll be hard to challenge that in the long term. But there needs to at least be some large and good euro denominated stablecoins. I think it's hugely important as more assets flow on chain that we have that. It's important for Europe. It's important for Europe's own financial autonomy. So I think that learning lessons from what we've seen in the US, having a European equivalence, I think is essential.
I think an important question to ask you when it comes to stablecoins is the future of money in the hands of private companies? Like, is this where we are going to?
Yeah, it's an interesting question, because you start to, it's almost like you are, these large companies are becoming like little mini central banks. They're not doing things that central banks do. They don't have the responsibility to, to cool down or to heat up an economy, or to monitor and maintain interest rates, because ultimately that will still be controlled by the worry about inflation and maintaining inflation targets. That's never going to be theirs. And ultimately, whatever they're producing is still pegged to that fiat currency and the central banks who are making decisions. So it's not a good analogy to say that they are becoming central banks, but there is definitely a certain amount of responsibility that's required for what is becoming these structural elements to the economy, and that's something that has to be, and that's why I welcome good regulation in the space, what they're trying to do with the Clarity Act in the US. But of course, there's a big dogfight going on between the incumbents and the challengers, and who gets what, and who gets to charge interest, and that ultimately, hopefully, that will be resolved at some point. I can't see it being resolved anytime soon, but at some point, so that there can be sensible regulation around stablecoins.
How do you see it when because like the US, same as the European Union, is working on a CBDC, how will this shift the market when we have like an official, let's call it, stablecoin?
So for me, a CBDC and a stablecoin, like the stablecoins that we have today are very, very different. Just because of the facts of the nature of I'm sort of quite libertarian in my views. I don't like the idea of us all seeing, all knowing authority that can program the money and confiscate it at will, and monitor every spending all the time. I feel that's fairly dystopian, world, and I don't like that direction that it's heading. I don't really see the need for CBDC. I think in the US they were very clear in putting an X through any idea of a CBDC being issued by the authorities in the US, and I think that's a good thing. We already surveilled and tracked a lot today, and all transactions are electronic anyway. And they'll be moving on to crypto payment rails, and that will be efficiency, and it'll be 24/7 markets, and that's it will be driven by AI and agentic transactions. But I personally don't support CB. This is not speaking for myself personally. This is my own opinion. But I'm not pro Euro CBDC. I don't think it's needed, and I think it's a bit of a red herring actually. When there's other things that could be focused on, and sensible regulation around the innovation that we've got, which in many areas is far superior to what's being proposed.
Well, is there anything we should have talked about, what we haven't talked about yet?
The only thing is just to touching on that AI point. I think the one of the things that's going to really change the way it's going to change crypto, and it's going to accelerate adoption is AI agents and the proliferation. Right now, I think the last number I saw was around, is it like 100,000 agents? I think 69,000 are using the X402 protocol. And that's not a lot, that's small. But I think in the same way AI changed, the way we use AI changed from, say, a year ago, us searching, what's the capital of Mongolia, and asking questions about the world, to AI, now daily using AI in everything we do in our lives, in the way we work, in the way we organize even our, plan holidays or whatever. It's become really a part of how we work. We co-work with it all the time. And I think that's going to happen with agents. I think once people get comfortable with the idea of an autonomous agent acting within a rule set, and limits that are defined by the owner of the agent, I think that the proliferation is going to be is going to take place really quickly and faster than we think. And that's because why? Because the agent can be doing stuff while we're working or sleeping or on a plane, 24/7 using crypto rails, stablecoins, and that makes sense. That makes sense. It's going to be there's some real value for investors. If you look just at the use case of investors themselves, the ones who adopt agents early and get these agents to work for them on strategies are going to have disproportionate benefit from being early, and over time those margins will be whittled down. So I think it's going to happen, and it's going to happen quickly. And I think that's going to it's going to be a flywheel that drives assets on chain. It's going to be a flywheel ultimately that drives more crypto adoption, because assets on chain means assets using crypto rails, and I think that's very good news for Bitcoin as well.
I mean, it was just like 2 or 3 weeks ago where there was an announcement that we have now more than 50% of traffic in the World Wide Web based off AI agents than based off human interaction.
That's astonishing. I didn't see that story, but I think, I can believe it. And I think that's going to, people already moved away from search engines or, to AI, or even the search engines have become AI. And so there's a lot of the traffic and a lot of the transactions and the search requests and are already in the hands of AI. And I think the agents are going to just, we're going to have the situation where the agents are going to be talking to other agents, and that's going to become the dominant, pool of transactions rather than, humans interacting with other humans.
What's your wildest prediction for the next 20 years?
I don't like to make predictions because I don't want to, like, somebody you pulling this podcast up like in 10 years time and said, Bradley Duke said this and he was so wrong or whatever. But I no one has a crystal ball, we don't know. But I think the AI thing and the adoption, I think by the end of this year, I think we're going to see agentic trading being a real thing, and agentic commerce being a real thing. I think when people were planning their holiday, why wouldn't they, if they can, get an agent to find the best tickets for them, find the choice of hotels, plan an itinerary, do everything for them. And that's just one example. I think it's going to become, and I already just see myself and my colleagues, how we work today. We co-work with agents all the time, to get everything that we're doing planned, to help really, even organize our emails, which ones we need to attend to, which ones we don't, and that's before we even get into coding. So yeah, I think that's it. I think Bitcoin is going to continue to climb, and I think it's I don't think it's wild to say that Bitcoin will be reach $250,000 and then $1 million in the next by 2030. I don't think that's an official position that has come out from Bitwise, and we haven't backed away from it. And I think that this is just going to accelerate the space, and it's going to real world asset tokenization will at some point grow to become a significant piece of total assets. Because ultimately those assets are still there. If you've got a piece of land that you've tokenized, that land is still there. Yeah. It's just because it's been dematerialized and tokenized, but the percentage of those assets now, dematerialized and tokenized, I think is going to grow to unimaginable levels.
Last question. Bitcoin price by end of the year?
By end of the year. I guess this all depends on, the recovery, right? So now in the summer, I'm not expecting anything to happen, for markets to move until at least sort of September, mid-September, when people come back. But I expect, I'm going to make the prediction and say that I expect a new all-time high before the end of the year. So,
wow.
Okay.
Let's hope so.
Yeah.
Bradley, thank you very much for the interview today.
Thank you so much. It was good talking with you.